This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC and OPEC Plus began 2 days of meetings on Wednesday, with sources saying a big policy change was unlikely this month. At its last gathering in early June, OPEC Plus decided to raise output each month by 648,000 barrels per day, BPD, in July and August, compared with a previous plan to add 432,000 barrels of oil per day over 3 months. OPEC Plus consists of the Organization of the Petroleum Exporting Countries and allies such as Russia. Washington welcomed the producers' decision in June that followed months of pressure from the West on OPEC Plus to raise production to help lower oil prices.
U.S. power companies are facing supply crunches that may hamper their ability to keep the lights on as the nation heads into the heat of summer and the peak hurricane season. Extreme weather events such as storms, wildfires and drought are becoming more common in the United States. Consumer power use is expected to hit all-time highs this summer, which could strain electric grids at a time when federal agencies are warning the weather could pose reliability issues. Utilities are warning of supply constraints for equipment, which could hamper efforts to restore power during outages. They are also having a tougher time rebuilding natural gas stockpiles for next winter as power generators burn record amounts of gas following the shutdown of dozens of coal plants in recent years and extreme drought cuts hydropower supplies in many western states.
Moving on to the top news in the energy sector.
U.S. crude stocks fell in the latest week, but fuel inventories rose, the government said on Wednesday, as refiners picked up activity, while industry production hit its highest in more than 2 years in response to tight worldwide supply and high prices. The U.S. oil industry has been trying to boost output, but inventories keep dwindling, with supplies at the Cushing, Oklahoma hub dropping to the lowest since October 2014, the U.S. Energy Information Administration said. Crude inventories fell by 2.8 million barrels in the week to June 24, far exceeding analysts' expectations in a Reuters poll for a 569,000 barrel drop. Production rose to 12.1 million barrels of oil per day, highest since April 2020, though the weekly figures are volatile and considered less reliable than monthly data released on a lagging schedule.
China said on Wednesday it will subsidize refiners if global oil prices hit above $130 a barrel, reiterating an existing fuel policy that closely tracks international markets but also with a goal to shield consumers from price shocks. The subsidies will be measured based upon the actual sales volume of gasoline and diesel, and the handouts will initially last for 2 months before further announcements if oil prices are consistently above $130, the ministry said. The subsidy is to safeguard stable fuel supplies, ease costs for manufacturers and alleviate burdens for consumers, the ministry said on its website. Next, we have the top news in metal markets. Britain on Wednesday extended a package of tariffs and quotas on 5 steel products by 2 years to shield local steelmakers, acknowledging it would breach international trade rules but saying it was needed for the national interest. Trade Minister Anne-Marie Trevelyan told Parliament the safeguards would help defend a strategic industry and British steel producers could face serious injury were the measures not maintained. Since leaving the European Union and the bloc's common trade policy, Britain has sought to carve out a role on the global stage as a champion of free commerce, calling out restrictive practices by others like China and advocating for World Trade Organization, WTO, reform.
Britain on Wednesday announced sanctions on oligarch Vladimir Potanin, described by London as Russia's second richest man and who has been buying assets from firms exiting Russia over the invasion of Ukraine. Potanin, known as Russia's Nickel King, was included in the latest wave of sanctions listings by Britain, which included business figures, financial firms and other entities. Britain, along with Western allies, has been imposing sanctions against Russian elites, banks and strategic industries since Russia invaded Ukraine in February. Russia says it is conducting a special military operation in Ukraine.
We will now look at the top news in the agricultural sector.
The war in Ukraine that has stalled its wheat exports will keep global prices high into the 2022-23 season, putting millions more people at risk of undernourishment, the United Nations Food Agency and the OECD said on Wednesday. Russia and Ukraine are the world's first and fifth largest wheat exporters, accounting for 20% and 10% of global sales, respectively, but Russia's invasion of Ukraine and the closure of the Sea of Azov and the Black Sea nearly halted exports. Grain exports from Ukraine are only 20% of capacity, as alternative channels, such as rail and road, are not as efficient as maritime routes, the Food and Agriculture Organization, FAO, and the Organization for Economic Cooperation and Development, OECD, said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.